things I said is, listen, if you are a 30-year-old millennial, you're pretty fucked right now because the expected future returns out of equities with all-time record high valuations and the boomers needing to sell them over time. Same with real estate, same with bond yields. Your ability to generate the same kind of wealth that your parents generated, the baby boomers, is precisely zero. And I actually said you've got one chance, and that chance is crypto. Because you can take risk at your age because you've got nothing to lose.
Right.
So we all know there's two times to take risk. One is when you've got nothing to lose, and one is when you can afford to do it. So when you've got nothing to lose, that was March 2020 into September. They were being given a check, $1,200, not going to change their life. They're stuck at home. They don't need to spend it. So they go on Robinhood and they discover call options. Brilliant. And guess what? It worked. And suddenly 86 million millennials got financialized all at the same point. But they're risk takers. They understand crypto. They understand risk taking from gaming. It's very different. We were taught different things, and the parents of the boomers were the silent generation, and they were much more risk averse because of the back of two world wars. So now we've got a group that have never seen stuff like that before, who have a lower wealth of their age than any previous generation in history, and they've seen an opportunity. So they're going to swing from the fences. And that's changed the structure of the option market. Makes me laugh because everyone's like, the option market's crazy. Look at this complete exponential use of options. This is a bubble. No, you've just bought 86 million millennials and probably, I don't know, 50 million, 70 million Gen Z into the investing base and give them Robinhood options, and they can't lose more than they put in.
Yeah.
Go for it. Right? Why the hell not? We all have to learn the hard way, and we also need a few victories. And that way, they might be able to speed up that process because you can lose money pretty quick, but you can make some good money quick too. And what's really interesting is these people are all coalescing on a platform like Reddit and talking about their losses, Keith. Our fucking industry is built around, excuse my French, built around people who don't want to talk about losses because it makes them look weak. These guys are laughing at their losses and saying, I learned from it. If we get the younger generation to treat this like 401ks that we were forced to do, which is bear market, bull market, just dollar cost average.
Yep.
That actually works to generate wealth if an asset's going from 2 trillion to 200 trillion, right? You should do very well. So you don't need to trade it, you don't need to do anything, and you shouldn't care about the bull or bear markets. Now, some people want to trade it. There's a lot of leverage in the space, not in the US so much, in Asia, and it tends to be pretty short-term leverage. And what's interesting about crypto leverage is it essentially works like an option because it gets liquidated. So you can't end up with unlimited losses. So it's actually quite interesting. But I think that, there's going to be periods when we hit the Goldilocks point in the economy. The central banks aren't printing, and it's that extended mid-cycle period. And crypto shouldn't do that well. And people will start to look at other assets and diversify. And, that's what I will do is, over time, I'm 100% crypto now. Will I remain 100% crypto? Without question, not. Because I'm out to maximize my returns and minimize my downside. So, but if you're young, you can just keep dollar costing averaging, and you actually want the bear market. You actually want, if you'd have dollar cost average, which none of us did because we're all Gen X cynics, if we dollar cost averaged the NASDAQ over that sell-off in 2000, we'd have done pretty well. Yeah. But we didn't, because we're two miserable old cynics who say, well, there was a bubble and that taught you all everything. Didn't teach anybody anything. As you said, Google, Apple, Microsoft, they did just fine. They didn't get to new highs as quickly. But if you look back now, considering we're talking about dollar cost averaging, so you looked back 15 years later, suddenly you've outperformed everything all over again. So we need to be careful of our Gen X cynicism. But I'm a cycles guy, as you are, and I will trade the cycles. It's as simple as that. Once you add a system of money in a community, what you're doing is you're you're incentivizing everybody in that community to grow that community and to benefit in that community. This business model is gigantic. And I have spent time speaking to the world's biggest music artists, media companies, membership clubs, everything. And everybody goes, oh my God, I get it now.
Yeah.
The NFTs are just part of this.
Yep.
So everything is going to tokenize. Disney will tokenize all of its franchises and Disney itself. There'll be a Disney token, and Disney will essentially be a digital sovereign state. Because you've got huge community, billions of members. You own the Disney token, so you're now part of that network, and you'll probably have the token of, let's say, the Marvel comics or Mickey Mouse, whatever sub-communities. So these are tokens as well. And there'll be NFTs, which are scarce digital assets, which we can collect. And all of that ends up being into the metaverse, which is the kind of the more broadly digitalized world that we live in, as opposed to it being, one game owned by somebody. In the current state of affairs, equity holders make the money and everybody else gets monetized. This community model means that everybody shares. And so you can actually think of this as investment becoming a culture.
Okay.
So let's say you invest in Rihanna's token, and Rihanna has another hit album and a massive tour, and everybody's talking about her social media. Her token's going to go up.
Yep.
You're a fan. You're creating videos around it, doing content because you're really involved in the community. And the more you do, maybe you earn more tokens, or maybe the token goes up because you're helping the community. What you've made is investment in culture. Culture has now become an investment, which it wasn't before. You'd have to just buy goods, and that was it. And you felt good because you're part of that community, whether it's, Nike trainers or Apple phone, whatever it was, whatever community you thought you were part of. This way, you're actually part of that community, and you create universal basic equity.
Yes.
That's a big concept.
That's a huge concept.
So a Gen Z or younger can discover a new game, which none of you and I will never discover because it's not our generation. They'll discover a new game. They'll go, oh my God, this is amazing. They will own the tokens in it. They'll want to own more tokens in it because they think it's amazing, and they will make money. That is already happening. As you say, what's going to happen is institutions are going to rebalance every quarter.
Yep.
If it's gone up a lot or gone down a lot, they'll be taking opposite flows. That actually gives market depth and liquidity, as we know, but it may dampen volatility. So over time, it lowers the expected future returns because the risk reward, if you've got less volatility, you're likely to get less upside over time. But that's a function of network adoption effects anyway. And you see the curve go less exponential over time as there's more adoption. So you're dead right. People are going to have to get used to it, which is why I've kind of made that potential call that this market will probably elongate longer based on this very fact, because institutions going into a new asset class will say, you know what, we're going to do this in 2022. So they've made the decision. They've been onboarded by Fidelity or Coinbase, and they've done all their homework, and they've had their trustees accept it. They've done all their paperwork. January's about the time they'll start investing. So even though the crypto cycle in the past was more retail driven, it's likely to elongate because of institutions. And we saw this in the commodity markets in the early 2000s after Goldman launched the GSCI index products and started getting institutions into commodity index futures and commodities themselves. It changed the structure of commodity markets for a while, and probably still has done.